Welcome everyone to the Kendall Report. It is Thursday night, so therefore the final video of the week, and we're coming into the first full week of October, and so far not too bad. We continue to see markets consolidating down here at these lower levels, but overall acting pretty well, I think. Title of this video, I saw some of you recognize Fed will not pivot. All the Fed presidents are running around and they're keeping the dialogue very strong, and they're not going to pivot, and there's no reason for them. We still have negative real yields, and they know it. They know they're still adding to things, so they're unless they get yields up to about 9%, we're pretty much screwed on the long run anyway. But the point is that they're not going to pivot, but that may not mean that much for at least short-term market movements. And I think markets are going to break away a little bit from some of the rhetoric from the Fed. And I talked to you about last night, the Algos were predicting that 21 period moving average was going to strengthen to the downside, keep a cap on the markets. We did just that yesterday. S&P ended up down 1%, 1.02, and NASDAQ down 0.68, Russell down 0.58. So a little bit of a negative day, pulling back towards some of the numbers. I'll go through the details in the technicals here in a few minutes, but just expect to see more of the same. I don't have any really negative expectations for the employment numbers coming out. They're expected to come in unchanged, 3.7, 250,000 jobs. The prior was 315,000. So everything's status quo. Everything's good, right? We looked at yesterday, we had jobless claims up a little bit, 219, and just a little uptick. And everybody's going, oh, that's finally starting to flatten, and the JOLTS numbers were down, and this is all good, and everything's starting to pivot exactly how they want it to. That may be the case. Maybe the Fed feels good right now, but I think overall there's a lot of work to do, as we all know, in this arena. And we saw, just by the talking heads coming out, we saw another round of selling in the 10-year. The yield curve flattened, and everything that was going down, the dollar up, oil up, gasoline up, especially. So everything is kind of just rebounding and still in context with what they've been doing previously. So the trends are still up on everything I just mentioned. The trends in yields are up, trends in dollar is up, trends in oil is up. All of those are just part of the trends. And so I'll go through, like I said, all the details here in a few minutes. I thought it was interesting, this whole thing with Saudi Arabia and the decrease of production by 2 million barrels. Have you guys noticed what I've noticed is Janet Yellen is now just a shill for the administration. Everything from somehow there's economic effects from taking away abortion, global warming is now the Treasury, and now she's been tasked to go tell the Saudis that they're going to tarnish their reputation, it's going to hurt their relationship, all that stuff. I mean, my gosh, what a shame. You want to talk about abuse? There it is, right there. So much for diversity. Is all I'll say there. I think it's kind of interesting, just the type of things that we see going on everywhere right now in this planet. So I'll leave it at that. I think that I'm just looking at my notes here, and really there's not, consumer credit also comes out. No one really cares about it. It's probably going to be up. All of that happened. I'll get into the details tonight. I think I can get through the broadcast fairly easy. I just want to thank everybody that is commenting on the new PPMs that are out. We'll be using them every night going forward. The predictive nature of these things are absolutely amazing. Those of you in the live room found that. you still have a chance to get signed up and get 30 days in the live room. And it's like a 2-for-1 sale, really. And I think you'll find it worth your time. So you go to kendallreport.com/indicators. Got to tell you, because they're just too exciting. And this update is pretty amazing. Everybody should have it. If you're having any trouble, make sure you contact info@Kendall Report so we know what your issues are. Most of the time, you just have to refresh and replace the indicators on the screen. Enough of that. Okay, so let's get into tonight's video, and let's talk about, let's go into the database. So here we go, folks. 1,492 buy signals, 100 sells. So we're continuing to get traction. I talked to you last night about the short-term database getting up between 1822, 19.29 as we come into the open in the morning. And I'll show you in a minute the ETF hack that I talked about, the XLE, is really performing amazing. I think it's up 6.4% this week, up 1.48 today. So we look at, just want to talk about this database a little bit. I think we're going to see further rotation, as it looks like a lot of patterns have bounced back very quickly. And some of this action that we've seen is starting to show up and starting to rotate into the database. Now, this is coming into Friday. So we're going to get the intermediate database right now. It is at, I'll bring that up just briefly here. It is right now at 24.23% bullish. I don't see anything changing in this. In fact, we might even see a slight downtick. So I don't really see big traction coming in. I'm not really expecting any kind of big rally, but I am expecting some sort of continuing consolidation in the markets. And let's go ahead and just get into that right now. Okay, we'll start off on TradingView here tonight. And one of the things that I was talking about last night is that the PPM2 is being forecasted to come down just a little bit. It's still got some negative action here. The last two sessions, we had a high of 38.20 on Wednesday. Yesterday, we had a high of 38.19.50. Any of you that have been following that 3-day trade that I put out there, the exit was today on the close. And so that trade is done. Decent little profit, not crazy profit, but a good profit. As we come into today, I want you to notice these grayed out lines here are the forecasts by the algorithm, which is a auto regression algorithm based on a Berg method. And this is really just forecasting that we're going to see continuing advance. I talked to you about last night that the PPMs, when they do this, it means the moving averages are going to turn up, and that's exactly what's happened. So we now have a rising 10-period moving average, and right now that's at 37.11. That's going to be your major support, and I'll bring up all of the metrics from the market grid here in just a minute. Something else I pointed out last night, we have this STX buy signal, and this is, we've had a sequence here. We had 5 going back into last week. So far, this is starting to set the tone, and these signals work even really good on an intraday chart. So they're very handy. But we did see this, and I'm going to draw in what my expectations are for this chart right now, and it will go along with the algos as far as everything goes. But we're looking at a potential for, let me change color so it'd be easier to see here. a potential for a kind of a 1, 2, 3. And you'll see, and I'll remove this, you'll see some dots here on the screen. These are Fibonacci projections for this pattern. So when we take a look at this, let me get rid of this setup here. But right now we've got targets on the upside here at 38.63, which is just slightly above that 21. And then we have a target at 39.74, 40.43. So I think that's getting a little optimistic, but that second dot comes right in on the 40 period moving average, which is also very near the 10-week moving average. And these are very, there's still a downtrend on all of these numbers right now. And the forecast is for, in the next couple of days, for the momentum to start to swing to flatten out the ppm 2, which is tracking the 21, which tells us we should get probably at least up to this 38.59 level, and we might see it trade in between the 21, which is roughly 38.30, and the 40, which is at 38.61, which is basically that fib target that I just talked about. But the algorithms are suggesting that we are putting in some kind of pattern. This isn't, I don't think it's on a level of, I guess, magnitude that there's a major low here. I think the trends on the weeklies are still down. There's still monthly trends, all kinds of things that are still out there that are still suggesting that this is most likely a bear market rally, and that we'll see this thing complete sometime over the next 5 to 8 days. And we probably see a retest of the low. We'll see how this all sets up. But we does look like we should be able to hold into some of the, at least the Fibonacci retracements and all of that. So let's take a look at over on the right-hand side, you'll see the RXT number, all the PPN numbers over here on the far right. It might be a little small on the screen, but I'll just go ahead and use this. We're looking at S1 37.34. That was the low. Yesterday we had 2 days ago we had a low of 37. I have to move this up here. We had a low of 37.34. So that's basically signaling a retest. If we get through that, then 37.07 is the next low. It's actually 37.10 would be the next target low, which is basically right at the 10 period moving average, which is 3711.93. So we could see some action down into that pattern there, but the algorithm has been incredibly accurate, because this, I think I showed you on the replay that going back to last Thursday and Friday, the algorithm was forecasting what's already happened. And it looks to me that this pattern in the live room, we talk about this 1, 2, 3 pattern. This is most likely what's being projected here by the fib indicator. So these are all indicators that come with the indicator suite, and it's just automatically indicating that these are price targets, and then you just look for confirmation. Right now we have PPM 1 is up at a 0.12, and it's being forecasted over the next couple of days to get into trend mode over the next 2 sessions. So as we come into the action on Friday, we got major news coming out. We'll find out whether we're going to, see a continuation, maybe a rebound here, challenge some of the highs of the last couple of days. Definitely we'll get some volatility, and we may be at that phase of the markets that good news is good news and bad news is good news. So I think the markets are looking for a reason to go up right now. If you look at what the rhetoric is out there, there's a lot of folks talking about what I said isn't going to happen, is the Fed pivot. But that doesn't mean that I say it's not going to happen, and it doesn't happen, that the markets aren't going to perceive that it will happen, which will affect market sentiment, which will keep a bid in this market for a short term. So we'll see how everything sets up. Big news tomorrow morning. And if there's anything that I see right away, then maybe I'll do I'll put some things out on Twitter. You can follow me on Twitter at PortfolioXpert, and there's no E in the expert. So portfolio and then just an X and then PERT. So yeah, I think these patterns are setting up fairly positive here. There could be one more day down, but it looks like to me we're close to completing this pattern. As long as we hold the 37.11, which is the 10-period moving average, we hold S2 for tomorrow, we should be in good shape. Next, we'll take a look at the NASDAQ. We got the same pattern here. We're now getting projections for 11,961 on the upside. Fib target 2 is 12,349, and the 21-period moving average right now is 12,258. So we're just right below that fib target 2. Same patterns that we're seeing here. Everything is being projected that we should hold these lows here and start to see markets go up. There is, I didn't notice there was one on the S&P, but there's a pivot 11,171. A penetration of that level would be a pattern failure. Don't see that happening. We should hold this 10-day moving average, which is at 11,410. So far tonight, we've had a range of 11,476, 11,548. So look for those ranges to set up. Next, we'll cover the Russell. Russell has a bit different pattern. I talked about this last night. It's suggesting that we're going to peak out over the next 2 to 3 sessions, and maybe this has something to do with the interest rates. I'll show you what's going on there in the next. And what we're seeing here, though, is if we can get over this 10-period moving average right now, or the 21-period, which is 1765. The last trade right now is 1759. So we're pretty close to getting above that level. The patterns here are also the same. Probably an S1, 1746. R2 is 1782. That'd be enough to get us above that number. And I suspect we'll have a fairly volatile day. We do have upward projections here as well. The upside projections here, Fibonacci, 1792, 1848, 1882. And that would put us all the way up basically to the 200-day moving average. So this is a similar pattern, but it has a little better profile than the other indices. All right, we'll switch over to TradeStation for crude oil. We get the daily. We're continuing to advance. I'll go back and forth here just for a minute. I want to see what the algos are suggesting, but we're seeing a contracting market grid here on crude. We're getting somewhat up to that target I talked about, between actually where we're trading now around 89 was a high, 89.37. 89.92 is going to be the upper end of this range. So I'm expecting to see it start to stall here. I'm going to go over to the weekly. And you see we're above, two things are happening here. We're above the 10-period moving average, which is still negative. And we're also potentially, if we stay above the, let me get the number for you, 86.56 number on a closing basis on Friday. That will signal an RTXL signal, just suggesting sideways movement. I do expect to see the market grid turn up, so I'll cover this on Sunday night when we come in. So I changed the order. I went straight to crude oil here. So let's go to the 10-year now. The 10-year traded up to 382.60. So we'll go looking at the market grid here. Let me bring that up on screen. This weekly market grid, we're looking at 387, so basically almost to R1, and we printed down to S3, almost an STX, so we rebounded from there. We got to the extreme for the week, and it's been straight up since. I think just a lot of what's going on in the bond market right now is it's very nervous. It's also very illiquid at the moment. And you have the Fed with their runoff. You've got a lot of sellers. You got a lot more sellers than buyers, which is obviously what's pushing the yields up to the upside here. So just expecting, we've got PPM1 at a plus 3.72 weekly. And I've been talking about this over the last, let's say, 2 weeks. But what we're looking at right now, the yields is going up roughly 120 basis points. So as we come in next week, we're going to be at 3.42 is going to be where the 10 is. And the following week, we're going to see this continue to jump here because of these PPMs and the angle of attack here. So this is a big time uptrend in yields. Nothing's going to change here. There's going to be a relative bid. What we saw was just trading down to the extreme within the volatility that was allowed this week. And I suspect, based on what's going on here, we could see the market grid turn up on Sunday night. So those of you that have the indicators, you won't be able to see that on TradingView until the first ticks of that. But I'll have these numbers on Sunday night for you, available on the broadcast on Sunday. So let's cover the Dow tonight. I think the Dow is going to continue to be in a sideways range here. Even if we had that big reversal last week, all of a sudden we're trying to close positive. Last week's close was 112.12. We're now printing 112.19. So we rebounded right off of the 10-period moving average, 109.47, the low 110.06. And we look at the S3, 109.66. So that was a big number. Then we also have S2 is at 110.51. This is a weekly graph. But this is what I was saying earlier, is that all of the trends in crude oil and interest rates and the Dow, they're all up, and they're up in a big way. This is intermediate trend, and these are major trends that are out there, and they're not going to go away. So on a relative basis, you're going to continue to see a pretty good sellers in the bond market, and then you're going to continue to see buyers in the Dow. But I think the Dow may have peaked. I think we get into kind of a choppy sideways range. We could trade within this market grid. And this week, to give you an example, the R2, R3 is 113, 113.70, 114.58, RXT 115 handle. And we still have these fib targets out there, 115.68. That's still a very solid probability of seeing the Dow coming up into that level. Next, we'll cover gold. Gold continues to have a really interesting pattern here. We're seeing that PPM's starting to turn up pretty good. We're still negative, so we still have some downward pressure. I talked about getting up to around 1728. We actually printed as high as 1738. We're trading 17 last. So we're back almost at just below the R3 here. And so we're looking at RXT was 1737.70. So we went exactly $1 above the RXT weekly projection. And now we're trading just below the R3 level. So a close, we're just going to go with anything over R2, which is 1704, that would be a pretty good sell-off for tomorrow. I think it's going to be positive, and we should see these PPMs continue to evolve here. So let's go over here and go to, let's go into and see what the algos are predicting. Let's go to the weekly so I can see exactly what's going on here. Yeah, so what's interesting, and I talked about this, the algos are suggesting across the board here is that this downward pressure on a 10 will continue. It's a minus 0.36 on a weekly, which is a downtrend. So we're in trend mode there. And on PPM2, though, we're sitting here, we're right at trend mode, minus 0.24. You see that in red over here. PPM3 is negative as well. So that downward pressure should hold the market back. Plus we have the 200-day moving average is right there as well. It's 1729. So everything's kind of hitting up on this ceiling, and we should see a bit of a retracement next week, probably back to 1700, 1790. We'll see what sets up here. But the algos are projecting a little more weakness in this market before we set up a bottom. So get these nice reversal here. I think there's going to be some challenges that go forward, and maybe that has a lot to do with the continued strength in the Dow I just talked about. So we're going to see the Dow stay firm at these upper levels. It's going to affect gold. We should see some pullback here, but it's encouraging on a weekly basis what this is starting to look like. I think it looks like going out several weeks from now. Let me see, back to the end of the month, the 31st is when the PPMs are projecting to start to improve a little bit toward the end of the month. So we'll see how we'll have plenty of information out by then as we get to the end of the first month of the fourth quarter. So lots to go on yet this year, folks, but it's going to wind down really, really quick on us because all of a sudden we're going to be at the end of October, and then we'll be into November and the holidays, and, boom, next thing you know, Happy New Year. So it's going to happen very quickly. And I do want to just make a comment. Those of you in Europe that took the time, several of you wrote some really nice responses. I asked last night to tell me what the conditions were like, and you really did a great job, and it was very helpful to me. I really appreciate that. Some of the stuff I experienced because I was in Switzerland just in September, and I saw the gas prices then. So some folks were saying it was like maybe a 1.75 liter, which was 220, 230 maybe, plus 240 when I was there. So I was hanging around driving in a Tesla, but I was paying attention to those numbers. But anyway, I think like I said, I just want to put that in there that I really appreciate you taking time. Some of you wrote some pretty extensive comments, so I really appreciate that. Finally, we'll get through Bitcoin here. We're seeing Bitcoin at 20,000. We're right on this. This is weekly. 20,784 is the weekly 10-period moving average. Down 1.59. There's going to be tons of resistance here, but this is the deal. This chart goes Sunday to Sunday. When I get into when we come in on Sunday night, we'll see how we're trading. But I think we're going to see that the PPMs are going to continue to improve, suggesting we're going to be able to trade up, maybe up to the 21-week moving average, and we're not going to get through that level, I don't think yet, which is 22.4. But this consolidation, this pattern that we're seeing, is starting to look really, really interesting. And there are, if I change the algo on the fib target, there are some targets that are suggesting that we're going to, on a short-term basis, there are some targets there. Let me flop it over here. The daily, yeah, here they are. Let me bring this up, and you'll be able to see this. But there's targets right now for 26.74. We basically hit fib target 1. Fib target 2 is 21.508, and then 22.023. So basically what we're seeing is we're just coming into the weekly resistance, but like I'll just say it again, the 18.2, 18.500 level was an amazing test, and there was a whole lot of reasons that this market should have broke down but didn't. And now just looking at the short-term outlook, at least for equities, trying to come back into some resistance there on the indices that I covered a little bit ago, might end up being a positive here for Bitcoin. Okay, folks, that's going to do it for the week. I really appreciate it. Make sure you hit that like button. We've been under 1,000 lately, and I would like to see the channel grow and get some things going. I am probably going to do some videos on Sunday that I will release that will cover some of the algorithms and the PPMs and the basically doing all the predictions and all the future values. And like I said, it's interesting to run algos on an indicator, because especially an indicator that I've got experience with since 1984. And I think I mentioned I've now rolled over. I've got 43 years of experience now. I've been doing this, but watching these indicators, they're part of me. So I'm really trying to help you folks be able to. I have to tell you, the algos are helping me, because I'm seeing just 2 or 3 bars in advance is enough to give a lead and tell you a lot about these patterns that I've been living in my head and in the real world with for since 1984. Wavetech and the PPMs were actually developed in 1984, so they've been part of my entire world for all these times. And I'm probably one of the few old dogs that just stuck with some of the original work that we did and just continue to walk it forward. And I know everything about what I know. I know what I know, and a lot of folks will ask me about other things, and I really focus on what I know. I don't really, I'm not looking to learn anything new from the standpoint outside of the context of the work that I've done for decades. So I will continue that until the end, whenever that is, hopefully a long time from now. Anyway, folks, have a great weekend. Have a good day trading. Be careful around this employment number in the morning. Should be interesting. Maybe I'll even do a Twitter Spaces or something around there if we get going. So anyway, thank you so much for watching. Thank you for all your comments and participation in the channel and the live room, all that stuff. You guys know who you are. So thank you so much. Thanks again. We'll talk to you on Sunday night. Hey folks, I always keep this music going for a while. I love watching you guys chat at the end of the show, so chat it up. I keep this going for about 5 or 6 minutes. It's good music anyway, so I enjoy it. Thanks.